Is inflation a worry for you at this point, Robert?
It absolutely is. Inflation has been lingering a lot longer than most have expected. While I do think that those inflationary forces are largely driven by COVID and logistical problems that will be solved sometime between now and March, I do think the next few months are a window of higher risk opportunity, partly from inflation, partly from possible changes at the Fed, debt ceiling negotiations, and we still have COVID lingering around. So I do think we're in a bit of a period here in the short term where we could see some churn. But I think it resolves itself, and I do have a positive outlook for next year.
So, Robert, I mean, we're showing charts right now of the NASDAQ, the Dow, the S&P 500, you name it. And the lines are, for the most part, you can see, like 30-degree up angles from the lower left to the upper right. I mean, there hasn't been a pullback of real note in quite some time now. When you say churn, when you say a little bit of opportunity, perhaps, how big of an opportunity is it? Am I looking for a 3 to 4% pullback? Am I looking for a 7 to 10% pullback or something even deeper?
Sure, that's right, Tom. I think maybe perhaps somewhere in the middle, and it depends on how these threads come together. So I do think inflation will resolve itself, but it's going to remain high. The CPI prints will be high the next several months. And I think if you put that against the backdrop of a battle in Congress, whether it's over the spending bill you referenced, the debt ceiling, or potentially the Fed chair, that puts the things into play in a way where I think we could see more of that moderate-sized correction, maybe of the 5 to 10% variety. But again, I think that's on a short-term basis, and the longer-term outlook is quite sound.
So then, what exactly then do you look for in those opportunities, maybe in that 5 to 10% range? Is it still mega cap technology? Is it the social media companies, or are we going those full-on cyclical industrial materials type names?
Well, one of the things that's exciting is we do have a long runway for growth ahead of us as we put people back to work and reopen some of these sectors that have had problems. We've done a lot of work that shows that margins have been quite strong. In fact, there's been a lot of concern about margins, but they have done quite well. 700 of the 1,000 companies in the Russell 1000 have margins better than the past 3-year average. So we do think there's a rich opportunity set. I would focus it in that barbell approach, like you mentioned. There is still some cyclicality in the market. For us, that means industrials and materials. And within technology, I think we're focused on the areas that are going to continue to add to productivity. So not so much the social side, but more of the productivity enhancing areas within technology.